Well, here it is, about time to wrap up the trading for November the 11th, 2014. The market did play pretty much to our script today. The easiest trade to see this morning was failure to take out the overnight session high, and we had a beautiful retest failure up here, and you were short in the 36-37 area. The market ran down, paused, move, pause, move, so we're expecting a second move down. We started out, we said there was a potential for a buy in the 35 area, but we really were most interested in getting long in the 30 to 32 area. So this is where our buy was. And you can see that the 50 lot trader was a seller in this area right here. So the big money was getting short. So it was a fairly easy trade to take and to stick with if you're into it. We had a buy in the 30 to 32 area right here, designated by the letter B, by the diamond and the square, and you can see right here that the shorts began to cover. So you're long in this situation in the 33 area, and if you'd stayed with it, and that would be hard to do, all the way up, you're out at 37 plus. But there were several trades right here. You could have taken a trade out against the mean green line for a small winner. Market came back, another B. We like to take the first two, and we will trade the third one. But the third one we kind of look at with a little bit of a jaundiced eye. The bloom is off the road. So you're long again right here. Here's a nice plus. And here's that infamous third B that comes up. So you're long once again in this area for another small winner. Then we get a retest failure here to test the high, and you're long in this area for another small winner. And once again, we fail to take out the overnight session high. We've got a head and shoulders pattern here. Beautiful entry right here when you take out that bar's low, and eventually the market trades back down to 31.50. So really a great trading day. We felt all the action was going to be with the E-mini today. That wasn't exactly true because gold and crude and the euro both ran, but the financials were dead, as they usually are. If there's no cash treasury market, there's no reason to trade the 10-year note or the 30-year. Safe to sell into this rally right here. You can just see starting right at this point right here that the 50 lot trader began to sell, and they sold all the way to the highs, and they have continued to sell. So the 50 lot trader is on the short side of the market. Lots of information that once you learn how to assimilate and put it all together into a cohesive whole, once you got a methodology that incorporates this information, you can have a significant impact on your bottom line. To the F1 screen, we've made another new contract high on the E-mini. I mean, the market is pointed higher. There's no way to get around it. We're dealing with a very strong P, another one, and the market is giving us higher lows right here. So this screen, the F1 screen, which is our capital flow screen, says find a place to get long. Is this confirmed on the F2 screen? Now the F2 screen is where we adjust for the F1 information, and we fine-tune our levels, etc. And then when they're both congruent or in agreement, again, it makes for a much stronger trade. And you can see right here, we're dealing with a B in an up market. Now, a B in an up market is long liquidation. If it was long liquidation and new selling, we'd have a trend day lower. So somebody's taking profits into this. So if we were to put all of this together, we're still dealing with a fairly strong P, and the market is still trading up. But you come in and you say, well, it's a P or a B, and that means higher or lower, right? This is a B, it means lower. The easiest trade, once again, to see would be failure to take out this 38-39 area. And that would be a give me or a layup. The toughest trade to see would be where can I buy it. So we got a low volume number at 30. We've got the start of this distribution on Monday in the 26 area. So 25, 27 will be buy one. 30, 32 will be, will be buy one. 25, 27 will be buy 2. And then we're going to sell failure to take out 38 to 40. Now, I think if we get through this, the next stop is 2050, way up here. Got to get through 45 first, and the market will probably pause there. So sell 2 would be 40, 46. But my feeling is we take out 2040. 2050 is the next stop. No news tomorrow. Wholesale inventories will not be a factor, so we'll be looking for news out of China, the EU, out of the Asian meeting, and something that tells us, adds a little bit of volatility or spark to the market. Okay, what's going on in Asia is Russia and China have signed a new treaty agreement. They're going to, the ruble yuan swap is in. They'll trade energy between them. It's not going to be dollar denominated. Russia and China and the rest of the countries around the world are doing their best to take the dollar down. And it takes a long time to do that. They know it. Current reserve currencies don't fall out of favor all at once. But that's a direct result of our current economic policies and devaluation of the dollar and the rest of it. And you can't blame other countries for wanting to change the game a little bit. You know, why do I want to hold dollars if they're going to depreciate on me long term? Okay, looking at the note, it's our F1 screen. Lower high, lower low. This market is pointed lower. Now, the only thing I see against this, and it may not be tomorrow, is the 10-year auction. They have to rally the market to move as much paper as they can move. Now, if they don't sell or move the paper, it goes back to the Fed. Everybody knows it. But so the primary dealers don't have any risk on these trades. They make money selling it to their clientele. They make money arbing futures against their cash positions. And if it all doesn't work, they give it to the Fed and they get their money back. So don't you wish you could be in that position? So this screen tells us to be a seller. If it weren't for the 10-year auction, I wouldn't have any problem at all. We'll just look out below. I'm getting short. Looking at the F2 screen, it's a saddle formation. Volume-wise, that usually means trading range right now. So if that is the case, we can be buyers where we were today, 31s to 03. And we can be sellers 8 to 12. Sell failure to get through that. And then 15 to 19. That's pretty much where we were this morning. Then we'll be buyers at 29 to 25. This market, though, when you look at it, is pointed lower. The volume that is controlling this is not this volume right here. It's the volume that's one back. So the best support is going to be in this 25, 24 area to 28, picking up this volume number right here. But this number, this volume right here at 03 is controlling the distributions right now. No news to speak of tomorrow. Just the wholesale inventories, and they're called up 2/10. Don't you love this business? I mean, every day is a little bit different. It's always the same. You got to put trades on. You got to follow your methodology, but there's always something a little bit different about it, and that's what keeps it stimulating and keeps us coming back for more day in and day out. Or at least those that have figured it out. That's what keeps bringing them back. Okay, looking at the 30-year. The 30-year was grim today. There was no volume whatsoever. The knob spread actually strengthened today. It came up about 4/32. Go figure. So it looks like we're rejecting prices below 40.20. This volume right here was the controlling volume, and you can see the overnight session stopped right there. You can see we're in a very, very high volume area right now. So we're currently at the buck. So selling failure to take out 41, 41.04 is pretty easy to see. got this break way up here at 10, 11, 12. Then, so we'll make 7 to 11, sell 2. On the buy side, last rotate stopped down at 25, so 21, 25 will be buy 1. And then 13 to 17 will be buy 2. I think one of the neatest things that we can do in the trading businesses is that it doesn't take good times for us to prosper. And we're kind of, you know, given any set of business circumstances, certain industries can prosper. And you don't have to be a bankruptcy attorney or a repo, have a repo business in a contracting economy. We just go to the short side of the market. And that's always comforting. Don't have to worry about, should I liquidate my stock portfolio right now and lock in all these profits and then pay taxes on them. You can just hedge it up. So we've got a lot more flexibility than the average bear does. Okay, looking at this screen, if I can get my crayon back, look at this volume right here and how it controlled the activity. So early in the session, we had a good trade against 55, 57. That's where we wanted to be short. Next trade was 60, 62. We blew through it. When we took out the high, we didn't stop till 65. So you didn't have a chance to get short at our second level. And the market really never stopped. And late in the session, we got all the way back up to 71. So we're back in that situation where we got a seller definitely at 70. 75, and the buyer 45, and there's 30 points, and quite often gold will set up in a 30-point range. So where are we right now? Our sell is 70, 72, and then 75, 77 for sell 2. The buy side, we broke it out at 59, so last rotate down was 64, so 63, 65 will be buy 1. But like the short side better than I do the long side. And then 58 to 60 will be buy 2. For those of you that trade London time, you've got a hell of an opportunity right here. This is a great contract. I probably like crude a little better because I've probably been a part of trading over 1 million contracts of those back in the 80s, 90s, and early 2000s. Gold was dead back then. It wouldn't move. So, but the neat thing about the profile and our methodology and our setup is that our bracketed or our retest failures for bracketed markets, every market or every contract will be in a bracket time and time again. Our setback trades are for trending markets. And our mean green trade is 50% retracement of the volume. And every market has those characteristics. So once you understand the methodology and the trade setups, what you have to know then is what's the average rotation from a pivot high to a pivot low. And our software answers that question for you too, right up on the title bar of the F4 screen. So there's a lot of stuff that we can do with the software and go more in depth with charts, and we'll be doing that here in the not so distant future. Okay, looking at crude, we've got a buyer in the 76.50 to 75 area for the last couple of days, and we have a seller maybe against 78. This thing typically moves in 15 handle increments, so 76.50 to 78 is our magic 15. Way to go. I mean, just knowing the characteristics and the personality and the parameters for your contract greatly simplifies the trading process. So when I've moved 15 handles in crude oil, I'm looking to fade it, or at least take profits. So where are we right now? We've got double distribution up, 78, 78 1/4, sell 1. 78.50 to 75, sell 2. On the buy side, the last rotation down stopped at 13, then K period stopped at 28. We're at 79 right now. We got a breakout at 50. For London, 25 to 50 is our first buy. I'd rather be short, but that's, I think, going to be the first opportunity, and then 76, 75, 77 for buy too. I like the second buy better, but this one, if it comes back down and we can't bust 77.50 and it starts back up, you really have to be long. I mean, and this market moves quickly. Jeff, if you're in the room, Jeff quite often leaves at noon. I didn't know which screen you wanted and the price increment of whether it's in a long-term distribution or not. And last but not least, the euro. Pretty strong market for the euro today. It did rally. And again, when this thing rallies 50 to 75 points, you think about fading it. Very, very thin market today. The big banks were closed. So, I mean, the conclusion we can draw right here is 125 even is resistance. So we're going to sell one. It's going to be 125 even plus or minus. Then 15 to 25 is going to be sell 2. I don't like the long side in this market at all because everybody wants the euro lower except for those that are living close to the margin in Europe. And they'd like to have it higher so they can buy more with the dollars. 75 right here, I mean, it's aggressive. It's where the breakout was. So 75 to 65 is buy one. I really do not like the long side in this contract. And then 40 to 50, which was resistance is now support, will be buy two. No news in our markets tomorrow that would affect the trading. So will resistance hold at 125 even plus or minus? And London, you will have our answer when London opens up. That's all I have for November the 11th, 2014. You all have a great evening. I'll see you bright and early in the morning, 6:45 a.m. Central Time. I'm out of here.